spoke with Gina. Do you agree with everything Gina said? Are you seeing anything else that might sort of change your perspective a little bit?
Yes, I agree with what Gina has spoken about, the earnings which have been robust this season. And, Alarian, he did mention that listen to what companies have to tell us, and they are telling us that we are strong, their projections are really strong, their revenue streams are really strong. This is really a big boost for the economy, and it's also being reflected in GDP numbers that have surpassed expectations. We're seeing in Q3 we saw 5% growth in the US, and then followed by 3.3% growth in the US. So all these projections, they really do sustain a hot stock market and robust growth in the US.
So then, Nadia, hi, this is Jennifer in Johannesburg. What does that mean then for bonds? Will we continue to see equities outperforming bonds for the foreseeable future?
So for now, we're definitely seeing equities, surpass expectations. They're flying with colors. We have record highs for the S&P 500, for the Dow Jones, and yesterday for the Nasdaq as well. We have entered a bull run, so it's only clear to see that it's sustainable. As for bonds, corporate bonds also overnight they hit record sales. So we do have a record high bonds issuance, and we do have record highs equities.
What about other areas of the world? So China, for example, we're obviously looking towards the MPC. Are you anticipating anything new out of that might interest you in China markets?
So we are seeing actually a lot of outflows from Chinese stocks because of the situation happening there. Property sector slump, housing market crisis. We're seeing a lot of issues happening even in the political area of things. So for China, we do anticipate that 2024 is going to still be a very hard year, especially as we continue to see outflows from Chinese stocks and also as it struggles with foreign investments.
Nadia, in terms of asset allocation, what is most appealing to you and your team right now?
So we're seeing a lot of inflows go into ETFs, gold ETFs, especially amid the geopolitical tensions that we're seeing, and as well a lot of inflows going into cryptocurrencies, which have taken a lot of favor of investors, especially after the Grayscale and BlackRock ETF approval.
What are you seeing in the commodity markets?
So in the commodity markets, we agree with the wider market that gold prices will surpass 2,100. We've already seen yesterday 2,050. Gold is a standalone investment safe havens, especially amid all these geopolitical risks and other risk factors that we're seeing, for example, China's woes, So for gold prices, we still see a projecting of upward trajectory for gold. For oil prices, we are seeing a little bit fluctuations between the $75, $85. The Red Sea disruptions are going to add on to gains for oil prices, but what's going to cap that is OPEC plus cuts that have already been priced in by the markets, unless they, in their March meetings, they announce bigger cuts, then oil prices are going to stay in this narrow range between $75 and $85.
Yeah, and we've been seeing that. Nadia, we were talking to Gina briefly about emerging markets participating in the rally as well. We touched on China. Is there anywhere else you're looking globally that you think is going to be benefiting from really what we're seeing is a bit more risk-on appetite from the investment community?
So from the risk on appetite, we're seeing a lot of inflows go to India, go to Japan. We've seen the Nikkei, at record highs as well. It tells us a lot about what's going on in the real economy in Japan versus, what's going on in China. So a lot of outflows going outside of China into Japan and into India and also into Saudi Arabia. So this is the asset allocation changes that we're seeing in the market.